Realtor.com just published a study about the top U.S. housing markets for 2021. And guess what? San Jose is number 2. So jump in, let's look at the actual data, how they did that testing, and what I think of the local market stats and the prediction for this year. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor who loves to talk about market statistics. So if you're new to my channel, definitely check out my market trends reports. But today we're going to focus on the U.S. economy based on what Realtor.com's report says, as well as their national housing market forecast. And then we're going to go into the local forecasts and perspectives based on the data that I follow. So stay tuned. We've got lots of great information. Let's jump into the computer and take a look. Okay, so here is the top housing market report of 2021 from Realtor.com. As you can see here, there is a list of 10 cities that made the top, and San Jose indeed is number 2. So a common driver of this year's top markets are areas with abundant, high-paying tech jobs. Because this ranking is based on combined yearly percentage growth in both home sales and home prices that are expected in 2021. So this study predicts that San Jose will have a price appreciation of 10.8% in 2021 year over year, and a 10.8% sales growth appreciation. So here you'll see the map of the top housing markets, all 10 of them. And this past year with the pandemic, we've all become more reliant on technology to work, learn, and maintain personal connections. And the technology hubs that make this possible are thriving, as are their housing markets. So it's not surprising that San Jose is one of those because of the large companies near here that have benefited during the pandemic. Think Netflix. Who hasn't watched Netflix during the pandemic? Google, Apple, Facebook, LinkedIn. These are all within commuting distance of San Jose. So not surprising at all that these tech employees can afford bigger prices and want to buy because they've been working and they probably want more space. And there is now a supply and demand imbalance that is really fueling the prices in this area. This is happening in several areas as well mentioned on the map here because of tech jobs or other sectors that have really benefited during this pandemic. Also, there's a larger percentage of younger households in San Jose, according to usapopulation.org, that are jumping into the housing market. So if the millennial generation, bulk of them are hitting home buying age or maybe moving up from a condo or a townhome, that's just providing even more demand into the market. Did you know that the average age of a San Jose resident is 35.2 years old, and 25% of the San Jose population is between 18 and 24, with only 10% age 65 and over. So there you go. There are so many young, probably tech-employed young people in San Jose that are putting more interest and demand into this housing market. And this states here about how younger households are really jumping in and getting into homes. So let's talk about a second point of the national housing forecast. So this is also a Realtor.com report, and there are some key areas that I want to point out here. Things that I typically track, so we'll definitely get into the local metrics related to this as well and how it compares to this national forecast. But first thing we always talk about is inventory or supply. And this report, as you see in the graphic down here, says that seasonality is going to make a return. 2020 was a very interesting year. We didn't have much of a spring housing market because of the pandemic lockdown. So we had a really active fall and late summer market, which is pretty unusual and not traditional. I'll show you the charts of that. But we expect to see a little bit more traditional seasonality this year. At least that's what Realtor.com is reporting. And the demand is going to be up. They're expecting, on average nationwide, about 7% more sales to happen in 2021. Again, having to do with those young buyers jumping into the market. And if you recall from that first point, San Jose, we're actually expecting 10.8% growth in home sales. Now, the third point to really look at is interest rates, because that affects affordability. And as you all know, we have phenomenal interest rates right now that are really fueling even more demand and interest for people to jump into the housing market. So the prediction is that we're going to top out at 3.4% at the end of 2021 and average around 3.2%. Still amazing historical interest rates. So that's definitely only going to continue to fuel the demand, not damper it. And then the fourth thing, of course, to look at when we're looking at how the market's going to behave and what to look at in the forecast are prices. So the national average is expected to increase 5.7%. Now, if you remember from that first point, they're saying San Jose 10.8%. So we're going to be double that. So now let's look at the local charts, because I think that helps to give you a little bit a sense what we expect seasonally and what we might see this year. So here is a Santa Clara County chart. I'm bringing up this as opposed to San Jose specific, which we will go into, partially because I just have more history when I look at the entire county. This is all the way back to the year 2000. And for younger buyers who are probably listening here in San Jose, they're probably don't remember what happened in 2008 and what prices did across the country, but really here in San Jose, the orange and blue are our prices depending on average or inventory. And there was a huge decrease that happened after the crash in late 2008. And that is because look at this inventory. We had foreclosures and short sales and people who couldn't afford homes. All of a sudden, so much inventory. Now, look at what's happened since then with our inventory. You see a seasonality here with a peak of inventory, typically midsummer. These years, it was September. Here's September. This year, it was actually June. Wow, 2017, right? We know was a very record year. It actually peaked in April, and then inventory just went way low. The following year, 2018, we peaked all the way in October. It was late. And last year, that was 2018. 2019 was much more traditional, peaking in June. And this year so far, 2020, we peaked in March because of pandemic lockdown, and we never really recovered from that. And here we are in April. We are still not the same level. This is, I just pulled this data on April 29th, so it's not quite the closed April inventory numbers, but we are still lower than what we were in March pre-pandemic. So as you can see, we are very low experiencing of inventory, but I do expect the summer rush to hit soon and to see a little bit more seasonality. The question is, how sharp will that increase? And will we be getting up into the 1,500 to 1,700 peak numbers like we typically have seen in the last 7-8 years, or will we be at a lower peak that we saw maybe in 2017 of about 1,000 units? That's the big question, right? Demand, though, you can see sales have been really strong. So let's go into the San Jose to get a little bit better view. I pulled the numbers for this here, and the first quarter sales in San Jose were actually 1,062 houses closed in the first quarter. So January, February, March of 2021. So how many do you think closed in 2020? Now, that first quarter was not really affected by the pandemic. The inventory started to be, but not the closed sales. So we only had 780. What's the difference that we saw this year in the sales and the demand? That's a 36% increase that first quarter in sales from last year. Wow, way more than the 10% that was predicted. But it probably will balance out as the market normalizes a little bit as well. Now, interest rates are really helping this, of course. They're continuing to stay low in the 3 to 3.25%. And prices year over year, March year over year for San Jose, we in March closed at I'm looking at the median prices here. We closed at $1.425 or $1.425 million. And March of 2020, our prices were $1.277 million. So that is an 11% increase that we've already experienced here year over year. So we're already at that point that Realtor.com is predicting us to have a 10% price increase. We've far exceeded the first quarter 10% sales growth increase. So the question will be, are we going to blow those stats out of the water and be even stronger than predicted? Or is this year going to settle out a little bit and balance more? I will say my predictions are that inventory will peak midsummer like typical. I don't think this year it's going to peak until July because I'm hearing more and more sellers getting the house ready in the market, and we're already at the beginning of May. So by the time the sales are peaking, it's July, maybe even actually August. Maybe the inventory peaks in July, and then the sales are going to slow down after that, probably because buyers are going to be getting houses and the buyer demand is going to soften a little bit. But I do expect prices to appreciate still for the next couple months, because we just don't have enough inventory. And look at those really strong pending sales, that blue dotted line. So until we get some better balance of a more traditional, where the yellow line is actually above the sales numbers, we are going to see price appreciation. And that's why we saw such sharp price appreciation so far this year. Overall, I think we're going to have a very strong 2021 in the San Jose area. I do expect to see a little bit more seasonality to it, maybe a slight price softening, but I do think we're going to still see some price appreciation happening over the next couple months until we hit a different level of supply and demand, and the balance kind of teeters the other direction. Thank you so much for watching. To understand the market more, watch how to tell from my stats if it's a buyer or seller's market, and also watch my sellers playlist for tips on getting your property ready to sell and take advantage of this amazing seller's market. Thank you.